Most people think investing is this big, scary thing. You need thousands of dollars, a finance degree, maybe even a broker on speed dial just to get started. But honestly, that couldn't be further from the truth, especially in 2025. The truth is, anyone can start investing, and you don't need a ton of money to do it. In fact, you can get started with as little as $5. That's right, just $5. In this video, I'm going to break down exactly how to start investing, even if you're starting from zero. We'll keep it simple, we'll keep it easy, and we'll avoid all the confusing jargon. This is a step-by-step system, so make sure you stick around for each step. If you follow along, you'll be well on your way to building long-term wealth. But if you skip ahead, you might miss out on some crucial information. Are you ready to get started? Let's do this. One of the biggest myths out there is that you need a ton of money to start investing. Gone are the days of needing tens of thousands of dollars and a fancy financial advisor just to dip your toes into the market. Nowadays, we have amazing apps that let you invest with literally pocket change. We're talking apps like Acorn, Stash, or SoFi. These apps are designed specifically for beginners, so you don't need any prior experience. They take all the guesswork out of investing by building a diversified portfolio for you based on your financial goals and risk tolerance. You don't have to spend hours researching stocks or trying to time the market. Just download the app, set it up, and let it do its thing. It's literally investing on autopilot, and it's perfect if you're just starting out or if you're on a tight budget. So, how do these apps work? Well, one popular option is the roundup feature. Let's say you buy a coffee for $3.50. The app will round up your purchase to $4 and automatically invest that extra 50 cents. It might not seem like much, but those small amounts really add up over time, especially with the power of compound growth. Think about it. How many purchases do you make in a week or a month? Now imagine if every single one of those purchases was automatically rounding up and investing that spare change. That's money that you probably wouldn't have even noticed was gone, but now it's working for you, growing in the market. These apps make investing totally mindless and effortless, which is perfect for busy people who don't have the time or energy to constantly monitor their investments. But what if you want to invest a little more than just your spare change? Well, most of these apps also let you set up recurring deposits. You can choose to automatically invest a certain amount of money every week, every 2 weeks, or every month. Even if it's just $5 or $10 a week, that's still money that's consistently being put to work in the market. Remember, consistency is key when it comes to investing. The more consistent you are, the more you'll benefit from the magic of compound growth. Over time, those small, regular investments will snowball into something much larger. Think of it like building a muscle. You don't get ripped by going to the gym once and lifting a bunch of weights. You get ripped by consistently showing up and putting in the work, even if it's just a little bit each time. So, if you're ready to start investing but you're not sure where to begin, downloading one of these beginner-friendly apps is a fantastic first step. Choose an app that you trust, set up your account, link your bank account, and you're good to go. It seriously takes just a few minutes to get started. Once you're all set up, you can choose your investment goals and risk level. Don't worry if you're not sure what to choose, the app will guide you through the process. And the best part, you don't have to think about it again. The app will automatically invest your money based on your preferences, so you can sit back, relax, and watch your money grow. Remember, the best time to start investing was yesterday. The second best time is today. Don't let fear or procrastination hold you back from building a brighter financial future. Let me put this into perspective for you. Let's say you decide to invest just $10 per week. That might not seem like much, but over the course of a year, that adds up to over $500 invested. Now imagine you keep that up for 5 years. That's over $2,500 invested. And in 10 years, you're looking at over $5,000. And that's not even factoring in any potential investment growth. When you factor in compound growth, that $10 a week could easily turn into tens of thousands of dollars over the long term. And the best part is, you barely even noticed that money was gone because it was automated. That's the power of starting small and being consistent. So, if you're tired of letting your money just sit in a savings account earning next to nothing in interest, take control of your finances and start investing today. These beginner-friendly apps make it easier than ever to get started. Remember, even small amounts invested consistently can add up to big results over time. Don't underestimate the power of compound growth. Now you might be thinking, okay Graham, investing with these apps is cool and all, but is that all I need to do? Well, if you want to truly maximize your investment potential and set yourself up for serious financial success, you need to hear my next tip. This one is a game changer, so stick around. Now, if you're serious about building long-term wealth, especially if you're just starting out, you need to know about the Roth IRA. The Roth IRA is like the holy grail of retirement accounts, and for good reason. It's one of the most powerful tools available to help you grow your money tax-free. That's right, I said tax-free. Here's how it works. With a Roth IRA, you contribute after-tax dollars, which means you've already paid taxes on the money you put in. But here's the beautiful part. When you retire and start withdrawing money from your Roth IRA, all your withdrawals are completely tax-free. That's right, you won't owe a single dime in taxes on any of the growth or earnings in your account. Think about how much money you currently pay in taxes each year. Now imagine if you could avoid paying taxes on a huge chunk of your retirement savings. That's exactly what the Roth IRA allows you to do. Not only does this mean more money in your pocket when you retire, but it also makes planning for retirement a lot easier. You won't have to worry about how much of your savings will be eaten up by taxes, giving you more financial freedom and flexibility in your golden years. And the best part? If you're currently in a lower income bracket, the Roth IRA becomes even more powerful. Why? Because you're paying less in taxes now while you're contributing, which means your money has even more potential to grow tax-free over the long term. It's like getting a double whammy of tax benefits. You get to keep more of your money now, and you get to keep more of your money later. It's a win-win situation. So, how do you get started with a Roth IRA? It's actually really simple. You can open one up with a reputable brokerage like Vanguard, Fidelity, or M1 Finance. These platforms make managing your Roth IRA incredibly easy and user-friendly. Once you've opened your account, you can start making contributions. Remember, with a Roth IRA, you're contributing after-tax dollars, so make sure you factor that into your budget. The great thing is, you don't need to contribute a ton of money to get started. Even if you can only swing $25 or $50 a month, that's still a great start. Remember, consistency is key when it comes to investing, and even small contributions can add up over time, especially with the power of compound growth. Now, you might be wondering, what should I invest in with my Roth IRA? Well, if you're just starting out and you want to keep things simple, I recommend investing in a target date fund or a low-cost index ETF that tracks the S&P 500. These are both great options for long-term investors because they offer broad market exposure and are designed to grow steadily over time. Plus, they're very low maintenance, so you don't have to spend hours researching individual stocks or trying to time the market. Once you've chosen your investments, the key is to leave them alone and let them do their thing. Remember, time is your greatest asset when it comes to investing. So the sooner you start, the more time your money has to grow. Let me give you an example of just how powerful the Roth IRA can be, especially if you start early. Let's say you're 25 years old and you decide to start contributing $50 per month to your Roth IRA. Assuming an average annual return of 7%, which is a reasonable expectation for the stock market over the long term, by the time you reach retirement age of 65, you could have over $150,000 in your account, all tax-free. That's the power of compound growth. The earlier you start, the more time your money has to grow exponentially. Even small contributions made consistently over time can lead to significant wealth accumulation. So, if you're not already taking advantage of the incredible tax benefits and wealth-building potential of the Roth IRA, I highly encourage you to open one up today. It's one of the smartest financial decisions you can make, especially if you're young and just starting out. Now, before I reveal my next tip for investing like a pro, make sure to hit that subscribe button and turn on notifications so you don't miss out on any of my future videos. I'm constantly sharing valuable insights and strategies to help you achieve financial freedom. You know, I get asked all the time, Graham, when's the best time to invest? People are always curious if there's a magic moment to jump into the market. Should I wait for the market to crash? Should I hold off until prices are at their lowest? And my answer is always the same. Time in the market beats timing the market. It's not about finding the perfect moment, but about staying invested over time. Trying to predict market crashes is like trying to time the lottery. You might get lucky, but it's not a solid investment strategy. It's more about luck than skill. The stock market is unpredictable in the short term. It can be volatile and erratic. It can go up 20% one day and down 20% the next. These fluctuations can be nerve-wracking. Trying to time those swings is stressful and frankly, a loser's game. It's a recipe for anxiety and poor decisions. But here's the thing, over the long term, the market trends upwards. Always has. History shows us that patience pays off. So, the longer you're invested, the more likely you are to ride out those short-term dips and come out ahead. It's about the big picture. Think of it like a roller coaster, scary in the moment, but the big picture is a slow and steady climb upwards. The ups and downs are part of the journey. That's why the real key is to just get started and stay invested. Consistency is crucial. And the easiest way to do that is through automation. It simplifies the process and keeps you on track. Because when you automate your investments, you take the emotion and guesswork out of the equation. It helps you stay disciplined and focused on your long-term goals. Automation is the closest thing to a magic bullet in the investing world. It's like having a personal financial assistant who never sleeps, never gets tired, and always follows your instructions to the letter. It takes the willpower, discipline, and emotion out of investing, making it completely effortless. Imagine not having to remember to transfer money into your savings or investment account every month. Think about it. How many times have you said you'll start saving next month or when you have more money? We've all been there. Life gets in the way, and before you know it, another month has passed without any progress. But with automation, you take that decision-making out of the equation. You set it up once and it just happens in the background like clockwork. You set it up once and it just happens in the background. No more worrying about missing a deposit or forgetting to invest. No more excuses, no more procrastination. Automation ensures that your financial goals are being met without you having to lift a finger. And here's the best part, you can start small. You don't need a large sum of money to begin. Even small, consistent contributions can make a big difference over time. Even if you can only swing $10 a week right now, that's $10 more than you had invested before. It's a start, and every little bit helps. And trust me, those small amounts add up over time, especially with compound growth. The magic of compounding means your money starts to earn money, and that can lead to significant growth. Plus, when you automate your investments, you're less likely to make emotional decisions. You're not constantly checking the market and reacting to every little dip and rise. We're all human, and when the market takes a dip, it's tempting to panic sell and pull your money out. But those knee-jerk reactions can hurt your long-term financial health. But when you've got your investments on autopilot, you're less likely to react to those short-term fluctuations. You stay the course, which is crucial for long-term success. You're in it for the long haul. Automation helps you stay committed to your financial goals, ensuring that you build wealth steadily and consistently over time. Okay, so how do you actually automate your investments? It's way easier than you might think. These days there are tons of apps and platforms designed to make investing accessible to everyone, even if you're starting with just a few bucks. Acorns is a great one if you want to start small and invest your spare change. You link it to your debit or credit card, and every time you make a purchase, Acorns rounds it up to the nearest dollar and invests the difference. You won't even notice the money's gone, but it adds up over time. Then you've got platforms like Fidelity or M1 Finance, where you can set up automatic deposits from your bank account. You choose how much you want to invest, weekly, bi-weekly, monthly, whatever works for you. It's like setting up an automatic bill payment, but instead of paying your bills, you're paying your future self. And the best part? Most of these platforms have super low fees, so you keep more of your returns. Now you might be wondering, what do I actually invest in? Don't worry, you don't need to be a Wall Street whiz to figure this out. Remember those index funds and ETFs I talked about earlier? Those are your best friends when it comes to automated investing. They offer instant diversification, meaning you're spreading your risk across hundreds or even thousands of stocks or bonds. It's like having a little piece of everything, so you're not putting all your eggs in one basket. Many of these platforms even offer what's called a target date fund. You simply choose the year you plan to retire, and the fund automatically adjusts its asset allocation as you get closer to retirement, becoming more conservative over time. It's like having a personal investment manager on autopilot. The point is, you don't need to overthink this. Keep it simple, keep it diversified, and let automation do the heavy lifting. Here's a pro tip. When you're setting up your automated investing, schedule your deposits for the day after you get paid. This is what's known as the pay yourself first principle. Instead of waiting until the end of the month and investing whatever's left over, which let's be honest is usually nothing, you prioritize your financial goals from the get-go. By automating your investments to come out right after payday, you're essentially making it a non-negotiable expense like your rent or your phone bill. You're treating your financial future as the priority it should be. Trust me, your future self will thank you. Look, I get it. Starting with just $5 or $10 a week might not seem like much. You might be thinking, Graham, that's not going to make me a millionaire overnight. And you're right, it won't. But here's the thing. Building wealth is a marathon, not a sprint. It's about consistency and discipline over the long term. Even small amounts invested consistently over time can grow into something truly significant thanks to the power of compound growth. Think of it like planting a seed. It takes time, patience, and consistent nurturing for that seed to grow into a strong and healthy tree. But if you're constantly digging it up to see if it's sprouted yet, you're only going to hinder its growth. The same goes for your investments. Plant that seed, water it consistently through automation, and let compound growth work its magic. There you have it, my friends. The journey to building wealth doesn't have to be daunting or overwhelming. In fact, it can be quite simple and even enjoyable if you approach it with the right mindset and tools. Investing doesn't have to be complicated, stressful, or require a ton of money to get started. You can begin with just a few dollars and a bit of knowledge. You don't need to be a Wall Street hotshot or spend hours analyzing charts. The world of investing has evolved, and there are now tools and resources that make it accessible to everyone. All it takes is a few simple steps. Start small with beginner-friendly apps, which are designed to help you ease into the process without feeling overwhelmed. Open a Roth IRA to supercharge your savings with tax-free growth. This is one of the most powerful tools available for long-term wealth building. And automate your investments so you can sit back, relax, and watch your money grow on autopilot. Automation takes the guesswork out of investing and ensures you stay consistent. Even if you can only spare $5 a week right now, that's perfectly fine. It's a start, and every little bit counts. That's $5 more than you had invested before. Over time, these small contributions can add up significantly. The important thing is to get started and stay consistent. Consistency is key in the world of investing. Time is your biggest asset, so the sooner you start, the more time your money has to compound and grow. The magic of compounding can turn small investments into substantial wealth over the years. Your next move. Now don't just watch this video and do nothing. Take action. Knowledge without action is useless. Pick one actionable step from today and commit to setting it up right now. It could be as simple as downloading an app or setting a financial goal. Whether it's downloading an investing app, which can help you get started with minimal effort, setting up your Roth IRA, which is a fantastic way to save for retirement with tax advantages, or automating your first $5 contribution, which ensures you stay on track without having to think about it. Take that first step and get the momentum going. The hardest part is often just getting started. Final reminder. Remember, skipping these steps means potentially leaving years of growth on the table. Don't let procrastination rob you of your financial future. By following these tips and making investing a habit, you'll be amazed at how far even small, consistent contributions can take you. It's all about building good habits. You'll be surprised at the progress you can make over time. Small steps lead to big results. So start today, and your future self will thank you for it. The best time to start was yesterday. The next best time is now. And hey, if you found this video helpful, don't keep it to yourself. Share it with friends and family who might benefit from it too. You'll love my next one where I break down the best books to read if you want to build wealth and achieve financial freedom. These books have the potential to change your financial life. Make sure you hit that subscribe button so you don't miss it. Stay tuned for more tips and strategies to help you on your financial journey.